Hi everyone, my name is Parsa Vahid, president of Strand Life Financial Group and your financial lifeguard. Today I want to talk to you guys about the top 5 tax saving strategies for 2021. Let's get started. So number one, the first thing I always recommend when we're planning for taxes is you have to know the tax brackets. Often overlooked, the marginal tax bracket that is implemented by the IRS has some standard deductions in it, but also we could do some tax planning strategies. So I'm going to go ahead and throw up on the screen right now the 2021 tax brackets. We're just going to stick to a married couple. We'll also put a link in the description below for individuals. But one important line is the jump from 24% to 32%. That's a 33% increase in your taxes. So one strategy that we take a look at for our clients is tax bracket planning. When you are around the $329,000 gross income, you take a $25,000 standard deduction, you're hovering around $305,000. So anything in excess of that is going to be taxed to you at 32% as opposed to 24%. So there's a whole bunch of different tax brackets, and just knowing those tax brackets is crucially important when we're doing tax planning. Number 2, health savings accounts. I think that health savings accounts are the absolute best tax strategy, and they're often overlooked. Most people either A, don't know about them, or B, just don't use them. But get this, hear me out. The HSA is the only triple tax advantage structure of any different type of bucket of money that we have. You can put money into the HSA and immediately you'll get a tax deduction. For a single person, the max that you can put in is $3,600. For a married couple, it's double, so $7,200. So let's just use me as an example. I have a family. I can put in $7,200 into my HSA. I get a $7,200 deduction on my adjusted gross income. All that money in there in the HSA is going to be invested however I want, stocks, bonds, mutual funds. I can then use the money in that to pay for any one of my spouse or my kids' expenses, any one of my spouse. I only have one spouse, but I can use it for my spouse or either one of my 2 kids. And if they go to the doctor, if they have a bump, a bruise, a broken bone, and since they're my kids, I can almost guarantee they're going to have a lot of those. So I can use the money in my HSA. I don't have to pay taxes on it when I pull the money out to use it for a qualified health expense. Another added benefit to tack on to the HSA is that once you're 65 years old, you can then use the funds for whatever you want. You can supplement your retirement, and you're not going to be hit with any sort of IRS tax penalty. I'm going to add a 2B. Okay, so we've got the 2, which is the HSA. We also have FSAs, flexible spending accounts. And I'll just use myself as an example because I think it illustrates the power of this. So we've got 2 kids in the house. We have a nanny. The nanny comes in. I pay her out of pocket. She takes care of the kids. And it's not efficient tax-wise, right? Well, wait. Here comes the FSA, the flexible spending account. Now, I'm blessed because my wife works for NBC, so we've got tremendous benefits, but most large employers also offer some sort of an FSA. So at the end of the year, close to the end of the year, actually right around now, is I can calculate how much I'm going to pay my nanny, and I can take that and create an FSA account. So let's just use 10 grand as an example. I pay my nanny 10 grand throughout the year. I fund a dependent care FSA through NBC Universal. I get that $10,000 deduction. Boom. I have now offset the cost of my nanny care using a tax-efficient form of payment. So I've got the HSA and the FSA, 2 wonderful tax structures. Number 3, this one is a little bit more complex, but I think it plays a pivotal role in today's environment. We're now dealing with Wall Street bets, GameStop, cryptocurrency. So we've got a lot, I would say millions of brand new investors who've come in. They haven't been investing for a long time. They're not sure, when to cut their losses, when to tack on to winning trades. And so it's safe to assume that a lot of people have lost some money on some trades this year. Well, with the advantage of tax loss harvesting, you can essentially implement a new tax strategy. Again, I'm just going to use examples. So let's say I bought Bitcoin, and although Bitcoin is flourishing, I bought it at a point where it was at its peak and it corrected itself. And let's just say I'm not bullish Bitcoin. You know, I had a little bit of money in it. I'm fearful. I want to get out. I can sell my Bitcoin. I can realize that loss, whatever that loss is. Let's call it $1,000. I can then carry over that loss to my adjusted gross income and reduce it. So I'm able to essentially harvest that loss and use it against my taxable income, hence tax loss harvesting. Number 4, I think this one ties right back into number 1, contributing to retirement accounts. So what we do at my office is we sit down with each client, we take a look at all of their income, how their incomes are sourced, whether it's actual wages or passive income, and we will do some tax planning. We like to do it right around now, the beginning of November, so we're not up against the clock. And we'll take a look at how much money you've made, how much money you actually need to pay for your bills, and whatever else is essentially just disposable income, we're going to start funding our retirement accounts, your 401ks, your 403bs, your profit sharing, your cash balance pension plan, whatever type of retirement account that you have, an IRA, you can then contribute to it and, again, bring down your taxable income. Now, I want to make one quick point. 401ks are normally treated as a withdrawal against your paycheck. So, you know, $100 per paycheck comes out and just goes directly into your 401k. Well, around November, let's just assume you need an extra 10 grand and you don't make an extra 10 grand in the next 2 months, enough to fund that with your $100 chunks being taken away from your paycheck. Well, what you can do is just go into your 401k record keeper provider and just deduct your entire paycheck or whatever dollar amount makes sense for you to meet your tax planning goals. So again, this is a strategy that we implement at Strand Life Financial, my financial planning firm. And it's something that you should as well, of course, consult with your own tax professionals and financial advisors. But I think it's an often overlooked strategy for most individuals, especially for someone who's in that high income, in excess of 300 grand. You're paying 32% federal, plus close to 8 or 9% in California. So if you don't have to pay those taxes, don't. Simple as that. Number 5, I think this one, again, is also overlooked, and it's long-term capital gains. Ladies and gentlemen, capital gains taxes are far better than ordinary income. I'm going to throw up on the screen the actual long-term capital gains tax rates. So you'll notice it's 0% for 0 to 80 grand, and from 80 to a fairly high level, it's only 15%. So if you can get by with paying long-term capital gains over short-term capital gains, which essentially is just ordinary income tax, you've got to do it. You have to do it. There's certain conditions where it may not make sense, but if you, let's just use again a cryptocurrency trade. Let's say you're in that trade for 360 days and you want to sell it. You might as well wait another 5 or 6 days, I should say, so you're at 366 days, because your tax on that is going to go anywhere from, 50% down to closer to 25, 30 at the most, because you're taking ordinary income taxes and instead you're paying long-term capital gains taxes. So there we have it, the top 5 tax strategies for 2021. Now, going into 2022, the Biden administration has put forth an increase on the marginal the highest tax bracket from 37 to 39.6. So if that actually does come to fruition, these strategies that we're talking about actually hold even more weight and value. If you like this video, please consider liking, sharing, subscribing, ringing the notification bell. It will really help me out in growing this channel. And every week we're going to be putting out videos like this on personal finance and investing. Thanks for watching, and we'll see you next time.